The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Little difficulties this morning. It's dark and gray here. A little rain coming down finally. As we look at the end, this is the big news here. Couple of comments out, maybe some government intervention. And when we look at the yen trade, dollar showed a little bit of strength. I'm going to just kind of reference that really quick before we hit the end. When I say a little bit of strength, I'm talking about from the lows. What is that? 93.62 up in 93.95. So again, a little bit of strength in the dollar, a little sympathetic situation with the yen here. But the thing that I want to point out is, we talked about, that 105, 106 area, the bottom of the hole in the marketplace from before, so to speak. You've got a hint of a new profile attempting to appear here. Okay, we've got a chart black. Let me get back to this. How are we doing on the chart now? Think we're good? Okay. All right, so as we look at this, we're going to get more than likely get a new profile, which is going to mean we can play defense, maybe get a little bit of a pop. That'll be something to pay attention to, but, I still stand by this big inflection point situation down. This is 106 down into 105, this general neighborhood. I think we still could explore this. But you may have a little bit of a trading opportunity, a chance to explore an entire fair auction on the upside. So I don't know where those inflection points are going to be. We could be at 109.5 on the upper band, and we could be at 108 or even 107.5. We could have a relatively wide profile here. But again, markets don't go in a straight line. This is probably going to be an example of that, and we may have a situation where you've got a short-term bounce. And then you might possibly be able to sell those upper inflection points as this thing is still in that long-term hole and it hasn't explored the entire hole on the way down, if that makes sense. Okay, so let's get back into the other server here. Hope you guys are seeing this. Sometimes when I switch servers, it loses it on the Tiger's Den. We want to take a look immediately at the S&Ps. This is one where, we've talked about this 2046, trying to use that, some of the negative breast situations on the intermediate, hopefully trying to explore the entire fair auction down to 2018. I still stand by that. Reached a high yesterday of 2056. This has been a real royal pain in the butt for me to deal with some of the stuff going on with the volatility. We talked about a wider profile outside box. We talked about kind of ensuing volatility that was going to happen. It's happening, and I've gotten stopped out of a couple of things I was trying to do, trying to lean against that 2046.50 area. Got a little bit too high for my likings yesterday, and I hate it. But again, we closed pretty well on the south side. Now we've rallied back up, reached a high this morning, 2043, backed off a little bit. I still like leaning against that midpoint area on the weekly. There we go. And hopefully this thing will fall apart a little bit here and be able to come down and fully explore to that 2018 area. I'm going to pull up our scanner really quick. And while that's loading, we're going to hit something else here. We're going to look at gold and silver, because silver finally, wow, I know you guys have been watching this. Silver and gold. Let's look at silver first. Okay, I'm going to redo the chart here because I think it might have lost it. We lost the server I was on. Hold on 2 seconds, guys. Sorry about this. Okay, I'm going to re-output this one more time. Here we go. All right, so as we look at gold, let's look at gold before we look at silver. We talked yesterday about 1242, 1243. And on the weekly, on this contract, nothing in the way up top. What do you do with gold now? Guys, I will clear this up in just a second on break. Let's stay with currencies because I'm going to have to restart that regular server with our real-time futures on it. So let me stay with currencies for the rest of this segment. Here's the Australian dollar. Looking very well. Again, getting back above 75.76. God dang it. I'm sorry, guys. Here's the Australian dollar. Getting back above 75.76, using that as support. We talked about that was the next leg up. On the Australian dollar, still going to stand by that. Stops below 75.76 on that trade. Again, trading above daily profiles. Let's take a look at the euro. We talked about the possibility of this thing climbing. Again, here's the, I think, this tick down is just kind of a retrace back in the 113.52, that former unfair high here. I like the way this thing's consolidating. Again, I know we've had a little bit of a ricochet move this morning, trading from 114.65 back down into this general area down below. I still like the way this euro is acting on the long side, and I think you've got to relax. Remember, we talked about that hole up top up there at 125. We don't have to get there, but I think it's time to basically relax the stops a little bit on the euro, trade it from the long side. I still think we've got some downside on the left on the dollar, as we talked about yesterday. And, there's no free lunch with this trade. It's going to be volatile. And I think, again, relaxing the stops, trading it a little bit lighter, getting more confirmation, more closes above profiles above 114.25 is going to allow you to add to that position. Again, I may be wrong. The dollar may climb, but make sure you put your stops in. I think you got to put a stake in the ground below 113.52 on this particular trade for that long-term move. Canadian dollars sloughed off a little bit. We talked about that yesterday. We're going to look at crude oil when we come back from the break, guys. We'll be right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Russ was pointing out something with the aggregate net breadth profile calculations. If I'm saying that right, I say it in a couple of different ways sometimes. It's basically saying, you know, we've on the south side here, on the amount of stocks trading below profiles. I mean, you can look at these indications as overextensions for sure. I'm not, you know, I look at the greatest confirmation is that the intermediate started shifting first, and we got that, you know, back in here. I guess it was, let's just point this. This is the daily, not the weekly. Russ, I really, this is a great question, or great statement, actually. You know, pretty thick middle ground. This is a pretty high middle ground. And, you know, when these things cross over and there's a high middle ground, it's not exactly, you know, the best indication, but we've been talking about this thing looking heavy. And I'm not just looking at the S&P chart saying, oh, wow, it looks heavy. I mean, the reason I'm saying it looks maybe look is a bad word, seems heavy, is because of these internals starting to kind of shift around a little bit more towards the south side than the north side. All right. Now, at the same time, it's a really good, you know, notification, you know, that we are overextended on the amount of stocks trading below the S&Ps. I mean, which means we've had at the same time a pretty big overextension up top. We've talked about that. I mean, you rarely get these type of you know, big overextended moves, and when you do, they can be looked at as at bare minimum time to take longs off. That's, I guess, basically the main point I wanted to say here. You know, looking at this alone, it's not, hey, let's back the truck up and go short. It's, you know what, we're overextended on the long side. It would be time to take some weight off. This kind of coincided with, you know, the heaviness, so to speak, that started happening on the intermediates. You know, we've had a little bit of a mixed bag lately. You know, we've been churning around here, and I always, you know, go back to, I'm going to go to the landscape view here. This particular midpoint on a relatively wide profile at 2046 is a big deal, and it's been difficult to try to orient stops around there. I'll just admit that. We've had a little bit of a DMZ up into 46, 49, up in that general area to try to lean against. It went a little bit too richer for my blood on above that area yesterday. I think we had, 2056. So again, getting stopped out is part of the game. It's nerve wracking. I'm personally looking for a really, a much bigger move. 2018, obviously is that kind of initial target, but until we get, this breath on our weekly to start evaporating some of the middle ground and start, really kind of coming back into sanity, if you will, and start getting closer to each other. We've still got a really wide spread here on the weekly. So the first thing that had to happen has happened. All right. The next thing we want to happen is to get below 2018. And if it would be just completely awesome if the weekly breath changed to negative at the same time, then you're banging it really hard on the short side. But again, we still got to kind of tread lightly here, because if we get to 2018 and the weekly breath is still strong, by default, we're not supposed to be we're looking at that long term as targets. And if you look at, and I'm going to go back to my S&P chart here, if I can get my screen to work. And let me start the server again. I apologize, guys. We've got a couple of people doing something for me on this server. If we go back to the S&Ps, I'm going to restate my chart here for the den. Sorry about that. If we go back to the S&Ps, and we are going to hit gold and silver a little bit in a second. Your next stop down is going to be 1971. I'd love to start seeing some closes below 2018. I'd obviously like to get there first. And then be able to kind of really use that as resistance. Hopefully we'd rally back up into it, close below, rally back up into it, and be able to short this. But again, it would be super nice if the weekly started showing some hints of the ability to be negative. And right now, I think you just, you got a mixed bag. Stepping back and looking at it, you got a mixed bag. The daily's negative. The weekly's still very, very positive. You got to look at 2018 as your targets. Take a lot of the weight off, if not all of it, and then just kind of wait and see. If we fall through, you usually do have a chance to look at it again. Daily breath, negative still, rallying back up into 2018. I'm just kind of walking you through the process ahead of time of what I'm thinking about. This is going to be a big area for it to get through, and we will have some people probably just given up for a while, and 2000s of that whole number kind of sticks in people's mind. It's a big psychological barrier, so that would kind of be something to pay attention to also. And then you've got 1971 next in line. So those are kind of the levels, if you will. And the daily breath crossovers are a really good system to try to get a bearing on an intermediate basis. What side should you be blocking out longs, blocking out shorts? But right now, again, I'm standing by. We look a little heavy in the intermediate. Let's put stops above 46. Let's have a decent risk reward. Try to get down to 2018, and reassess things when we get down there. Okay, just telling one of my guys something here. If you guys have any questions about that, I hate to be vague if I am about the S&Ps, but again, you've got some mixed signals here. You got an outside profile. I'm trying to use 2046 and maybe a little bit higher as a DMZ, 2046, 2048 to just lean against on the short side, because we haven't explored this fair auction yet. And I just feel like, we're going to do it just to do it. That's a lot of times this happens with these things. And if you go back in time, you'll see that. I know that's not a very scientific way of saying that, but sometimes it just does it to do it. And we've got some help with the breath turning negative on the intermediate. And the cool thing is, if you look back in time and you look at these S&Ps and you look at these breadth crossovers, if you can get, we've had a big move up, and if you can get the daily breadth to start crossing over as we're kind of at the highs of a move here and that heaviness is apparent, you can get some decent washouts and great risk reward scenarios. I mean, we've had this happen. We've talked about, if you've been watching this show, we've had this happen quite a few times as we were sitting on the highs of the market. So it's kind of a cool, I think, leading indicator sometimes. And 2046, 2049 is something to lean against there. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we're going to have Joey on to, this segment, so you guys are in for a treat. We're going to talk about these S&Ps a little more. I hate to focus on them, but there's a lot of weird things going on in the world right now, and Joey and I are obviously going to talk about those weird things as we usually do. But, you know, I could put up – let me do this. Let me put up the continuous contract really quick, and let's just – actually, let me put up the the spiders. Let me just do that. Again, we're leaving out, what, 16 17 hours a day of volume when we look at the spiders. Very similar looking chart. Not exactly, but again, I like to look at profiles relative to not continuous contracts, but futures products because they trade about 24 hours a day. Joey, you there? Joey?
Yeah. Can you hear me?
Hey, yeah, man. Hey, how are you today? How's Hong Kong?
Excellent, excellent. It's
As,
pouring rain here, but it's good to be on.
Great, man. Great to have you. I've missed
Thanks.
you.
So what are we? Sorry, I missed the show earlier, but what are you talking about right now? What are you
Okay, so
covering?
what I wanted to talk about specifically was the broad equities market in the United States, and what I was talking about is we pretty much have focused, and I don't have enough data here. I'm gonna have to adjust that, guys. So I'm gonna go back to my futures contract. We've been talking about the heaviness of the internals on an intermediate. The breadth crossover that happened. The long-term breadth is still very positive. But we've got an outside profile right now, and our intermediate has turned negative almost at the highs of this move up here. So I've been basically, just to get you up to speed and everybody else that's joining late, I'm leaning towards the short side, but I'm making sure my stops are in. And I just wanted to get, you're over there. You've been in China recently. Gold is rallying, silver is actually popping, which is kind of amazing. What's your take on where we might be headed, all things considered?
Well, I agree that things are turning more negative. If you look at the longer term breadth, even if you look at the weekly breadth, you'll see that the number of ones above the weekly breadth has been coming down significantly in the last week or so.
You're right.
And then the daily and other breadth, along with the ETFs, have all come off as well. So, April is still one of the best months of the year, and May is one of the worst months of the year.
Okay.
So, as we kind of near the end of April, we're right in the middle of it right now, but I don't think we get a big breakdown just yet. But as we get closer and closer to May, I'd be real careful. And we're also topping out slightly below the previous top, which is also a negative sign. We never got to make a new high here on the equities markets. So
something else, Joey, that somebody said earlier, Russ in the den. We got really, really, I would call it overextended. We talked about this when it was happening, but Russ pointed it out. I mean, we were 3% of the stocks in the S&P, only 3% of the stocks in the S&P were trading below profiles on our long-term weekly. At the same time, and when that started changing, our dailies started turning negative actually on the breadth. And my question to you is, do you think, computers are computers, and I understand seasonal trades and all that, but do you think these computers might be trying to get into this type of a trade in May earlier because,
You know what
I mean?
Front run the sell in May trade.
Yeah.
Sell it 2 weeks earlier. I think if you look at all the global indices, not just the U.S., the U.S. has been the strongest of all, right? But if you look at China's topping out at way below the top. I mean, like, we're not even, we're much closer to the bottom than to the previous top in China. Same in Europe. Europe basically kind of retraced halfway, and now it's heading back again. Whereas the U.S. has almost basically gotten back to the previous highs, and now it's kind of turning. So, if you think about it globally, we're actually seeing a follow through of this topping out process globally, and all the indices are actually, failing previous tops. As you know, and the U.S. is kind of the leader and is still fading a bit here. So
right.
I think there's really very little reason to be chasing the markets up here. Like, I don't see any fundamental reasons why you should be chasing the markets up here.
I agree with you fully. It's like block out the long side.
Exactly. You have earnings coming up, which, given the slow economy, I don't think earnings are going to be great. I think given that the first quarter has been good for the stock markets, I don't think analysts have actually cut their earnings.
Okay.
So
we could have like bad fundamental news coming out at the same time.
I think earnings are going to be a key driver of the markets going lower if all this turns out to be correct. That said, there's all this dovish talk of for all the central banks still.
Right.
And so, it's one of these things where central banks now actually think that their job is to keep the stock market up. I don't think that was ever in any central bank mandate.
I'm glad to hear you say that, because I thought
created the stock market. When they created the central banking system around the world, I don't think a single central bank had that mandate that all its citizens must make money in stocks. I mean, that's, is that a mandate of central banks now? Like that is the, so I don't know where history.
Well, when I run for office in 2020, Joey, that's going to be my, that's going to be my platform.
Well, yeah, exactly. I think by then people will be like, well, of course that should be the. Let's vote for him. That definitely should be the case, right?
since we're voting for the people who are telling us that they're going to give us the most, I think I'll just throw that in as my platform in 2020.
I'd vote for you, John.
You're welcome. Thank you. Hey, look, man, let's talk about the 10-year. Can you hang on?
And the DXY. I want to talk about DXY.
Perfect. Great. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And Joey, are you still with us?
Hey, John, I'm here.
Great. Hey, listen, I wanted to talk about the treasuries for a second. I know we've kind of been longish to sideways on this thing, you and I together. We talked yesterday. I'm just showing my chart here. I hope you're seeing it. Yesterday, we talked about this new profile attempting to appear. We had this happen a couple of days ago or a few days ago. And then we just, the profile didn't lock in. But we had this yellow bar close yesterday. The scanner's showing new profiles. I'm just showing you a visual chart for guys in the den. This is all within the scanner. So we've got unfair lows at 130.07, unfair highs 131.09. Do you still think this is a buy the dip trade, or and block out the short side, or you think you can play both sides of the market, or what's your thought on the treasuries, considering that? The dovish comments, and also they just shaved over a whole percentage point off of global growth. Yeah. And that was like 25 or 30%. I think it was a 30% shave. So is the easier trade? But, go ahead.
I'm just thinking at this point, I would basically play a range of 128 to 131, and I don't think that the treasuries go rallying to 140 or something, because you can't have a 10-year at next to nothing. I mean, we're already, the 10-year yield is already too low. The U.S. is in recovery mode. They are raising interest rates, whether it's slower or faster, that's fine. But I just don't think that 10-year, natural 10-year rates should not be at this level.
Yeah, I'm listening to you, and don't take this the wrong way, but yeah. I've been saying that for so long. I'm just, it's like, this is crazy. This is crazy. Buy the dips, the easiest thing in the world to do on the treasuries, and I don't know. Where does the party end for this stuff? I don't know. I mean,
yeah, I just find it hard to believe that it'll go to 140 or above. But I guess if it does close above 131.06, 09, we're just gonna have to go with it. Like it's. Yeah. Maybe the world craps. If this is correct, in that in May we get a real
pullback, right?
Pullback, then we may have treasuries actually blow out of the 131.06 top. And if it closes the week above that, then I'm going long. I don't care. I don't care. I will go with it. But
it's kind of weird lately, and amazing lately, that market likes lower rates, and this kind of thing has been feeding on itself, both ways here. Bad, possible slowdown, dovish comments, market likes it. But I'm still, my stance on it, you and I talked about this before. It's like these things are probably range bound. I mean, we said this a month or two ago, right? Range bound to long.
Yes.
And now, if the market does pull back, what are these things going to do? I mean, are they going to pull back also? Probably not. I get, not in a big way, even if they do.
If the markets pull back, this thing probably goes higher, right?
Correct. So, yeah, correct. So it's almost like a free trade. I hate to use that term, but it's like, what's the easier trade, to try to short the S&Ps or to try to buy the dip on the notes? I would pick buy the dip on the notes all day long.
Yeah, that's true.
Yeah.
But yeah, so there's really good support around the 128 level. So if we got down there, it's pretty heavy up here at 131. But if we got down to 128, I'd be buying a dip on the treasuries. I don't know what would cause it to go down there, but yeah. That's...
right.
The dollar index, surprisingly, the dollar's been pretty weak, and even then the treasuries haven't gone down. So,
I know. There's so many factors leading to that thing's just sitting on the launching pad, wanting to just squeeze shorts. It's just, Hey, can we talk about gold for a second?
Yeah. Gold has been a surprisingly buoyant trade, and on the weeklies, it's showing very good signs. Above the weekly, holding above the weekly TAS bars. Above the weekly unfair highs. There's a lot of support around the 1200 level. I pointed that out a while ago, and basically it bounced right off of 1206,
right,
and then straight back up to 1262. I mean, but I still think we're kind of stuck in a trading range. I don't think we necessarily blow out to new highs yet. I think we probably come off. I'm hoping it comes off again. But I think we're kind of stuck in a trading range for at least a few more weeks.
So you said something really important. I guess about a couple of weeks or a month ago, you said, and I've mentioned this a couple of times on the show since you said this. We talked about, what's the real mandate for the trade that you're trying to get into? Is it to be long on the long term and try to find opportunities to go long, or vice versa to go short? And you talked about leaving a couple of contracts on just to remind you of that, keeping that core.
Yeah, absolutely.
Even if it's a small position, keeping that core position. So in this case, you're still trying to not look at being, having some low probability, maybe high risk trade, of trying to trade this on the short side, even for the interim, like the very short term, is trying to just still maybe keep a couple of cores on and buy the dip still in gold, so and just not even if it's a trading range, not messing with the short side up top.
Exactly. So just trying to maybe at least keep one contract on at all times, just to remind yourself which way the trade is supposed to be.
Right.
This thing has held in a very good consolidation pattern after breaking out of a very, I guess this has been in a downtrend since 2011. Okay, so since 2011, this thing has been in a downtrend. We haven't broken above that huge downtrend line yet. That huge downtrend line is at 1350 or 1337, and that's the 200-week as well as the downtrend line. But it has broken through the 3-year downtrend line, which is going back from 2013. So we've broken out of some important resistance. We're going to hit another resistance around the 1337 level.
Okay.
And,
well, listen, I hear the music.
In the meantime, it's just range. I think it's range bound for a little bit.
Great, man. Hey, listen, thanks for coming on today, guys.
Okay.
Guys, we'll be back for our last short segment in about 2 minutes.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And I guess we've got a bit. Thanks, Joey, for coming on. It's just awesome to be able to talk to him. We got some big, oil meetings, I guess, coming up soon here. This is the May contract on crude still. I'm still looking at this contract because it's the continuous contract on eSignal. We talked about not playing around with this until we got up into this 41.31 area. You got to pay attention to, I guess we're 5 days ahead of that meeting right now. So again, we could have a little bit of a gyration or two before the meeting. We've almost reached this. I mean, what am I saying? There could be a gyration before the meeting. Of course there could. When would that statement be wrong? I'm an idiot. High 40.91, 41.31. We've gotten close to this unfair high. We talked about, it's still kind of okay to be long, not okay to be short. That was based on, yesterday's action, putting the stops below 39.65 and being able to reach for that a little bit more. Haven't quite met the 41.31 yet, but we've definitely got into the neighborhood. So again, I think you might be a little range bound between 39.65 and 41.31 on crude until those meetings happen. We're going to take a look at silver really quick. This is, I guess Larry Pesavento will be speaking about this. 1578 unfair highs on the weekly. We've busted above, and we've also cleared some previous congestion on the daily. So again, we had a little bit of a trade opportunity to get up into that area after we kind of crossed borders up here. I've been not that bullish on silver if you have been watching this show. The easier trade's been gold, in my opinion. But right now, it looks like any retracements back into 1578 have to be bought now with stops below, and you may get a little run in this thing. For you guys who caught this early, that's awesome. We've had some opportunities trading against intermediate inflection points here, but I personally have been passing on those. Let's take a look at the XLE. Not a lot of cooperation yesterday. This is, again, one of the things that I've been looking at to really kind of gauge. And here's our weekly. This is the main issue here. Very small profile, very narrow profile. You don't see these too often. So, again, these are, again, we've got this meeting. Crude oil's at the top of the range, 41.38. You want to try to trade breakouts outside of these thin profiles. And right now, don't see a lot of leverage with crude oil being long. I think you've got a chance to trade the underlying in a little bit of a range opportunity here. But we came off 63.09 almost perfectly, as you can see. And that's not, getting the go-go juice to crude oil as far as another indicator. I think we're just kind of going to churn around here. If you want to trade it in a range-bound mode, it's probably the best time in the world to do that. All right. We're going to take a look at the financials. This is something, and again, I'm going to go back to the scanner really quick after we look at this. I'm a big fan of putting stops above 22.37 on the XLF in general and letting this thing fall apart. And where does it fall apart? You've got some really good indications here getting below daily profiles also. I think you just got to let the 240s regulate the trade up and use those unfair highs on the 240s as we build new profiles going down to kind of relax those stops. Use it as a trailing stop. Guys, thanks. Larry's next. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.